best traders in the world. The one thing I learned was they take losses, and they take losses quickly. They recognize that they're wrong and they get out. They don't mess around. They don't sit around in a losing trade and try to say, well, it's going to turn around. They're very quick in exiting a trade, taking a loss. And their motto is, it could be the right idea, but it's the wrong time.
Sitting down today with Blake Morrow. It's been a while to talk with you, Blake, about trading and kind of how you do things in the market. We were on the trading battle together a few weeks back. It was a lot of fun, kind of trading during the NFP. So good to have you back on the podcast, and look forward to discuss your background in trading.
Thank you. It's nice to be here, and it was a fun trading battle. Those non-farm payrolls and any of those news type of events can be interesting to trade. I've spent many years trying to tackle and polish my trading around the news, but it used to be easier years ago, believe it or not, and it's become a little bit more difficult as years have gone by.
So tell me a bit more about kind of who you are and what you do these days.
Well, my name is Blake Morrow. I'm the president of Forex Analytix. I started that about 10 years ago. So prior to that, I started as a trader in 1996 as a trader at block trading. And block trading was one of the first day trading operations ever to exist in the United States. And they were featured in a Forbes magazine. And I had a Forbes magazine. I was already a stockbroker at the time. That means I used to just call people, tell them what stocks they should buy, what stocks they should invest in. I actually did the IPO of Pixar animation. Maybe you might know some of their movies that they've done for kids in years past, like Toy Story. Anyway, but I became a trader at block trading as an independent trader. I had an investor. We found an investor that would back myself and my best friend. We started trading in 96. By 1999, we were the largest traders in Phoenix, Arizona, and we opened our own brokerage firm in Dallas. So a bunch of us, there's like 5 of us, we moved to Dallas, Texas to open our own brokerage firm called Centerpoint Securities. And we had our own day trading operation right through September 11th. So I traded through all those years, and we eventually sold our company to a company called the Wise Trade Group, and then I became their chief of the currency division for many years. And then we were bought by Ally Financial, or MB Trading rather, which was bought by Ally Financial. So I was chief currency strategist throughout the transition. And then once Ally Financial bought our company, we knew they were going to they were going to kill the currency trading division or currency analysis division. So that's when I spun off to start Forex Analytix, which was about 10 years ago.
I want to go back into how you started trading in the first place. Like, what was that first experience with trading for you?
Well, that's a loaded question, but I mean, going back then, joined block trading in 1996, and so when I joined block trading in 1996, I really didn't know what I was doing. I was in the internet bubble, if you will, and I got pretty lucky on a couple of different fronts. First of all, my best friend who traded next to me, he learned how to trade from a market maker that brought a company public called GoToNet. And GoToNet, the ticker symbol was GNET at the time. He had a very good feel of the stock because he knew the people behind it and everything else. Well, learning how to trade next to my friend who was actually quite skilled in trading was great. He was a great mentor to have. By doing that, he taught me a lot of like some of the key principles that you learn as a trader. But you have to remember, at that time, we didn't have the internet to watch other people. We couldn't talk to other people. You had to talk to traders that are around you. And there's, a group of 50 guys, predominantly guys, in an office. And there was a few women traders. and you kind of learn from the people around you, the do's and don'ts about risk management and positioning, and how to take losses, and how to extrapolate gains, and all sorts of things. Anyway, my initial experience was I took $50,000, and in 6 months I lost 30,000 of it. So, and now you also have to keep in mind, I was living off the market. So if I wasn't making money, if I didn't make above and beyond $50,000, I wasn't making money. And so I was really living like a extremely poor college student. Well, because this is kind of my education at this stage, and then after that, for the next 3 years, I ended up just learning how to trade, digging myself out of a hole, and I turned that 20,000 into about 1.5 million 3 years later. And so as a result of that, I myself and a few other traders, we opened our own brokerage firm in Dallas, and half of those profits were mine. So I left my investors, started trading for myself, and kind of the rest was history.
Tell me about the pressure of trading when you have to make a living from it. Like you have to get certain amount of returns per month to pay your bills from it. How do you deal with that?
That's a good question. I get asked by traders all the time. How do I do this for a living? There's a couple of components that are most important in my opinion. You always have to have enough of a what you would call a cushion. So you figure out what it costs you every month to live. You have to have 6 months, year, more than that, socked away so you don't think about it. Because the moment you trade and you need to trade to make money, or you don't pay for you can't pay for your bills, you can't pay for food, you can't support your family, whatever the case may be, you're really your back is against the wall, and you're going to make very poor decisions. So I've always found it best to trade, with an ample. You obviously have to have a great trading account. You have to have a proper trading account with decent leverage. You have to understand your risk, and you also have to have money put aside that you don't even think about, that is strictly just used to pay bills. And you need to make sure that you keep that supply of capital on the side always replenished. As long as that happens, and I think for most people it's probably 6 months, a year, 2 years worth of capital sitting on the side, then you don't have the pressures when you're trading, because every market is different. And as a trader, you have to learn how to deal with that specific market and what's happening at that moment. And not every market's going to give you opportunities. I mean, hell, I would consider myself 90% predominantly a currency trader. I know seasonality. I know when the good times are. I know when the bad times are. I know when poor liquidity times are. I know when the news flow that's driving the markets are not giving us great opportunities. I know when we're in a range environment and I have to shift strategies. So if you don't have that knowledge, and now keep in mind, I've been doing this for 30 years. If you don't have that type of knowledge, then you'll feel the pressure of always trying to make money every single month, but you don't know when the good times are, the bad times are. You can't prepare for certain things that are coming at you. And so for me, I have a kind of a long-term scope from a macro point of view, but more importantly, like a kind of a framework point of view on how I tackle the markets.
Just want to take a quick second here about what something Blake mentioned regarding, and I think the market context, being able to know when to change strategies, when to use different methods. We have a whole training on that specific topic. It's a free training that you can grab with the link below. It's an advanced training on how to adapt to the market context, how to know when things are moving, how to be able to either change your size or change your strategy or change your methods, the way you trade, to be able to fit the market better. Hope that's going to be useful. You can grab this with the link below. It's 100% free. I want to be able to add value here and give you the tools you need to be able to do this right. So I thought that would be useful for you. Use the link below to grab it, and we'll jump right back here to the interview. All these things you mentioned, the seasonality, the when to change strategies, when to use other markets, can you teach us to someone right away, or do they have to kind of learn over time? Like, are there some things that you cannot teach someone in trading?
First of all, I think that I get asked by trader. I've been dealing with retail traders for many years. Before I even started Forex Analytix, I had a community at MB Trading and at the Wise Trade group of traders that they've been in my chat rooms for literally 20 years, and I've seen people come and go. And I'd like to believe that I can teach everybody how to trade, but in all actuality, I think there's some people that are just incapable of doing certain things, or buckle under pressure. There are certain things that I believe that take experience, but what I've always focused on is that you have to be disciplined. You have to have great risk management. You have to you have to be able to shift gears when market sentiment shifts. And a lot of that is from experience. What we always choose to, or what we try to do as a group, is we try to reshape the bell curve. If you have a bell curve, it's like, okay, you spend 10,000 hours in front of your computer trading, you're a professional. Great. Okay, fine. If we can make it that you spend 3,000 or 5,000 hours in front of a computer, but you really get the gist of it, and you can kind of cut cut some corners because you learn from senior traders that have been doing this for so long, guys that have traded on bank desks, or guys or gals, that have been in the business. They've had ups and downs. They understand the struggles, and they can teach in a proper manner. I think you can cut some corners there, but there's a lot to be said for experience in the markets. There really is.
Dealing with traders, do you see any commonalities into the ones that are actually making it long term, the ones that actually succeed in trading who come into you? Do they have any specific traits or characteristics or any mindset that they have in common?
100%. I would say discipline. Discipline is a big one. And discipline, just we're all on the same page. I was taught discipline at a very young age. I was a Marine. I was an infantry Marine. I was a guy that they just gave a rifle to, and I went in the front lines. I'm a combat veteran. I've been to Somalia and many other Eastern Asian countries, in the jungles, and I've done a lot of things that required a lot of discipline from me. So what I realize that makes good traders is people that have good discipline as a whole. That's one characteristic. The other characteristic is, and I think this is one that's taken me so long to learn, is when I traded with a group of traders. I did prop trading in a physical location with a group of traders, which I would consider some of the best in the world. They were handpicked by a gentleman. His name's Ronnie. Etienne, have you ever seen the BBC video called "A Billion Dollar Day"?
Yeah, I have. Yeah.
Okay, well, Ronnie, who is the gentleman, he was the Swiss gentleman that was in New York. There's three traders. There's one in Japan, one in London, one in New York. The New York trader is from Sweden, for Switzerland, excuse me. His name's Ronnie, and Ronnie is a good friend of mine. He brought me in. He found me, brought me in, and I traded for him and his partner for about 4.5 years. Arguably, these are the best traders that you're ever going to find. They were handpicked from banks, and I traded with their first group, which was about 12 traders, and then their second group out of Greenwich, Connecticut, which was 8 of us. And do you know the one thing I learned from them? Best traders in the world. The one thing I learned was they take losses, and they take losses quickly. They recognize that they're wrong, and they get out. They don't mess around. They don't sit around in a losing trade and try to say, well, it's going to turn around. They're very quick in exiting a trade, taking a loss, and their motto is, it could be the right idea, but it's the wrong time. Right idea, wrong time. That means that, like, let's say I'm buying euros today, and I'm taking a loss. Yeah, they'll say, you know what? I'm getting out. I'm done. That doesn't mean that they're not going to buy the euro again. It's just the wrong time. It might be the right trade idea. It's just the wrong time to be in that trade. And this was probably the most valuable lesson I've ever learned, because I watched some of the best traders, arguably in the world, take losses, but their losses are small and their gains are big. And the reason why their losses are small is because they accept that they're going to take a loss and they just get out. So those are things that you, as a trader, and anybody that's listening here, should incorporate immediately. Is you might have a great idea and it might still be a good idea, but it's the wrong time. And you can always re-enter. You're a trader. If you're a trader, you can always re-enter.
Definitely. You mentioned discipline in terms of being one of the characteristics of the traders who tend to succeed. Is discipline something that you can teach someone, or how did they actually develop discipline?
Well, I mean, Amazon, they sell this self shocker you can put in your keyboard. So every time you hit your keyboard, it electrocutes you. I'm just kidding. I'm joking. Discipline's hard to trade, or hard to teach. It's the old idea of you see a fire, and a fire burning, and you stick your hand in it, and you're like, ouch, that hurt. You take a loss. But some people, they just keep sticking their hand in the fire. They keep doing the same thing. And I can't teach that. I can try to tell people, but I think you have to recognize it yourself as a trader. I would say one of my strengths as a trader is I know my weaknesses. So if I know my weaknesses due to, my habits, my trading habits, maybe my analysis, I feel that I'm very proficient at understanding the macro reasons why things are happening. But then again, I can't understand some of the, simple calculations on understanding, positioning around the options market. Well, I understand that that's one of my weaknesses, and if I can find people around me and having a community around me, and I can incorporate people that I trust that do certain things better than myself, then that's great. I'm a wonderful technician. I'm a great technician because I know what I do works for me, and I don't make it difficult. I keep my analysis very simple, and it's been the same for the last 25 years. I know a lot of traders, they're undisciplined because they think that to make more money, I have to add more indicators, or I have to do something different. No, what you're doing, if you're making money, works fine. What you need to add is size. so so I do the same thing over and over and over again on a daily basis, and I have a few different strategies that I employ, and it depends more on what's happening in the market than anything. And I think a lot of people lack discipline because they feel that in order to make more money, they have to learn more, they have to incorporate more into what they're doing. And I strongly disagree with that.
How do you add size? I feel like a lot of traders who are good at some level have this problem of like how to know when you can add size, like how much to add it every time. Like how do you make this work for you and not kind of be too slow with it?
Yeah, that's a good question. First of all, whenever you're adding to a position, it should be, unless it's pre-planned. So this is there's a I've seen so many traders lose so much money because some, like, an asset they're trading is going down, and they're like, and they're long, so they think it's going up, but it keeps going down, so they just keep adding. It's what some people like to call martingale strategy. Eventually you average in so much, by the time it turns, you eventually make money, right? That's a very, very, very flawed system to trade. Anybody that's ever tried to do that, I've just watched blow up time and time again. However, if you pre-plan your entry, like, I'm buying here, I think an asset's going higher, but I'm going to buy here, 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 based on Fibonacci's, or support levels. You think this is a really critical level that you want to buy something, but you're not really too sure if it's going to make it all the way down there. So you want to buy at a couple of different levels. As long as you're adding while it's pre-planned, that's fine, because you know what your exit strategy is, and that's key, right? Knowing, okay, if it reaches this level or below, I have to exit everything that I bought. Well, you already know in your head that is the case, and you should already have a good understanding what, from a risk management point of view, what your loss is going to be. So that type of adding is okay. I try not to add to losses unless it's been pre-planned. What I like to do is I like to add in momentum when something's working for me. But to answer your question, how I do that is really simple. I ask myself, would I get into the position now if I didn't own it? So let's say I'm buying the euro and it breaks out above, let's talk realistic scenario. Let's say the euro finally cracks 120 sometime later this year, and I own it at 117, where we're at right now. When it's at 120, if I can sit back and say, you know what, if I didn't own the euro right now, would I buy it? And the answer is yes. And then, how would I manage that trade? I'm going to trade it, that independent trade, just like I would trade anything else. Make sure I got good risk management. Okay, what's my exit strategy? And as long as I can do that, then I'll add to a position. So, as far as risk management goes, when you're adding on positions, I think that's a very personal question. I think you and I, or anybody else listening in, we all have different views on risk. I think a lot of it is really deep rooted. It's how you grew up, how you view money as a whole. I come from a very modest background. I grew up, I would say lower middle class America, and that's how I grew up. I didn't grow up really wealthy. Although I've traded with a lot of traders that grew up in, in right outside the city, and they grew up, on yachts. So the way they approach risk management is going to be different than the way that I look at things. So, like I said, I think it's a very deep issue, but I always ask myself from a very simplistic point of view, am I okay with that loss? Like, whatever I'm risking, whatever position I'm in, I always think about what the worst case scenario is, because the worst case scenario will happen. I'm not saying it's going to happen in that trade, but it will happen. I take losses just like everybody else. So what is my worst case scenario? What's my exit strategy? If I get stopped out of everything that I just bought, because I'm adding, am I okay with that loss? And I'll know really quick, because if I can't sleep, if my mind is just constantly thinking about my positions and what I'm doing, that means my position size is way too big. And I do get in those situations, Etienne. It's not uncommon for traders to get in uncomfortable positions. But if you ever feel uncomfortable, then you need to bring down your size, not add to your size, right?
Walk me through the trading styles that you kind of focus on these days. Is it more like reversal, trend based, or what kind of things you look at in the market?
It's a good question. I do a lot of everything. I do a little bit of everything. Let's say that. I do like to buy pullbacks, and here's the reason why I like to buy pullbacks. I buy pullbacks in markets that I'm very confident about. Your natural question would be, what makes me as a trader confident? Usually it has to do with two components. One of them is a technical component, because I feel that I'm very good at reading charts in a very simplistic fashion too. It's not, I don't have a bunch of complicated indicators on my charts. It's not anything like that. But I have to feel that where I'm entering the market technically is appropriate. Usually it's because I've seen a retracement of that is maybe like a 618 Fibonacci ratio that's retraced far enough, and there's a lot of key levels around there that I think we're going to get a pivot. So technically, I have to feel confident, and then what else breeds confidence in me is understanding why I am doing what I'm doing. So a perfect example was earlier this week. I guess it was yesterday. The euro was trading around 116.30s or something like that. It was like substantially lower than where we're at right now, maybe about 60, 70 pips. And they announced that France is going to postpone um, uh, you know pension reform until the next presidential election, which is in 2027. That was an automatic. I have to buy the euro. Period. End of story. I know why I'm buying the euro. I know I need to buy a lot of euro. Now I need to find the chart, the intraday chart that fits what I want to do. So that, for me, understanding why I am doing something is so vitally important. When when you and I were in a trade battle, like there's certain things I wasn't willing to do. Like I'm not willing to really trade yen right now because I don't have a good feeling for it. There's too much push and pull between politics, the correlations between yields, the dollar effect, what's happening, obviously when I say yields, what's happening in the bond market or, the 10-year notes, to risk aversion, to risk appetite. I think the yen is a very, very fuzzy and murky decision for either side. So therefore, I'm already lacking confidence in from a macro point of view and why I should be buying and selling. So I won't even do it. Technically, I might find a great level, but it doesn't mean a lot to me because I can't put size behind that position because I don't have the confidence level and the understanding on why it should be going up or down.
So there is some discretion there, or is it based on fundamentals mostly?
Yeah, absolutely. 100%. But, Etienne, I have to say, I've been, for example, I've been watching CNBC every day for 25 years. I have a pretty good understanding of what's happening at all times. It's not because CNBC is the greatest. I could have been watching Bloomberg, or I could have been watching, Yahoo Finance, or whatever TV it is. I just have a very good understanding of what's happening at all time. Even when I'm on holiday, I'm immersed in the global macroeconomic picture because that's my edge. And if you don't have an edge, you're I want to say disadvantaged in the market. You're trading against a lot of people with a lot more money that are a lot smarter. And I don't have a PhD. I actually don't even have a degree. I left college to be a stockbroker. So, when you have to compete against people of higher caliber that have more money, that are smarter, you have to have an edge. And so my edge is immersing myself in the markets and understanding why things are happening.
Is there anything we didn't cover or touch on that you wanna mention, you wanna add here? Any important advice or lessons you got?
For any trader that's listening to your podcast, I'd like to say it's not easy. Trading is not easy. You can simplify things and make it easy to a point where you have a simple system, whatever works for you. And I always try to tell people that what I do and how I trade doesn't necessarily mean you should trade that way. It's what works for me. There are 1,000 ways, as the saying goes, there's 1,000 ways to skin a cat. There are 1,000 ways to trade the market. You have to find what works for you and what you're most comfortable with. But I will tell you that if you take big losses, you will never succeed in the markets because you can't trade if you don't have capital. That's a fact. You can be an observer. You can sit back and go, wow, I wish I would have bought the euro there, or wish I would have sold the S&P there. But unless you have capital to trade, then you don't have anything. So that goes back to what I was saying earlier. One of my biggest, and I have to try to reinforce this with everybody I talk to, one of my biggest lessons I ever learned was just 10 years ago was keep my losses small. Don't let them be big, because trying to make back money you lost is lost time. Not only is it lost money, but it's lost time. So keep your losses manageable. That means if you're wrong, get out. If your idea is wrong at the moment, get out. Doesn't mean it's a bad idea. It just is the wrong time. So, take your loss like a man or a woman. Take your loss, move along, find the next trade.
So tell people when I can find you and connect with you after this podcast if you want to reach out or learn from you.
Well, the best place to find me is, if you use Twitter or you use X, is Forex Analytix. That's our company handle. Or you can follow me. I'm PIPCZAR, Pipzar. That's on Twitter as well. Or you can just go to forexanalytics.com. Now, Forex Analytix is with an X, so analytics spelled with an X at the end. But that's the easiest place to find me. I'm pretty vocal, and I'm in the public eye, so I shouldn't be very hard to find.
Awesome. We'll put a link in the show notes. People can reach out to you there directly and connect with you. You do some good stuff out there. You've been in the market for a long time, so definitely people can learn from you and get a lot of good advice from there. So I appreciate that. Thank you, Blake, for being on the podcast. It's been a lot of fun, and hopefully we can discuss trading again next time.
Yes, that sounds great. Thanks for having me, Etienne. I appreciate it.